Hi, everyone. I'm Ivan Bayuki, and welcome back to Wall Street Silver. Our guest today is Bradford Cooke. He is the chairman and founder of Endeavour Silver and Aztec Minerals. Brad, thank you for joining us.
Oh, my pleasure.
Mr. Cooke, thank you very much. Just so our audience knows, Endeavour Silver has done something that was very popular recently in our community, anyways, in that your company has started withholding silver from the market that your company's mining, waiting for higher prices. Is that correct?
Yes, in the first quarter and again in the third quarter, we withheld sales at the end of the quarter. The idea being that in both cases, the price of silver actually dipped going into the end of the quarter. And yet there's a very strong seasonality to silver, and we, from our own experience, just have to be patient and wait for better prices. So that's what we did at the end of September. And if you look at the amount withheld from sale, we're talking about 1 million ounces of silver. Wow. And even now, here in November, we've seen a bounce of almost $2 since late September. So pretty good math when you take a look at it, the reason why we did it.
Yeah, I remember you guys when you announced this back the previous quarter, 500,000 ounces, and it was big. Everyone was all cheering on Endeavour, and people started calling, hey, Keith Newmeyer over at First Majestic, why aren't you doing this also? Because I know he's done that in the past, but he wasn't doing it at the time that you sort of led this year. And then you did it again this quarter. And then I saw Keith followed you this quarter in that First Majestic. So, you guys were sort of the trendsetters this year in holding silver off the market. And Keith sort of followed your lead. Good call by you, I think.
Well, thank you. I should point out for your listeners that this is not the first time we've done this. We've been doing this for almost 10 years. Now, we don't do it all the time, obviously. We went several years during the bear market without doing this at all because it was a bear market. But when you're in a bull market and the seasonality of the metal price swings returns with a bang, then I don't see why people wouldn't withhold metal from time to time and capture a higher price in the following quarter. It's really a sales strategy to maximize our profits.
Yeah. No, it totally makes sense. I mean, and it's been a good move for you so far at the time. I mean, this past quarter, you've probably gained an extra $2 or $3 an ounce. Now, is this something you're waiting for like 30 or 28 before you would reduce these levels? Or is that just not something you're willing to talk about right now?
Our secret sauce is not to pick prices.
Okay.
Our secret sauce is to look at trends, short-term trends, and to look at our experience, look at the charts. And when we saw the run-up, for instance, last year in the metal prices in the summertime, and then the tumble after September last year, we were expecting a repeat performance. So guess what? We had the nice bounce this summer, the run-up through June this year, backtracking all the way through third quarter. That's why we withheld our sales in the third quarter. But again, there was almost guaranteed bounce coming in the fourth quarter, and here we have it.
Yeah. All the charts look strong, especially, I don't know if you follow Michael Oliver, his momentum charts, but that's looking incredibly strong. A video I have running this weekend will be on that subject. But let's change the subject more to the overall long-term market. I mean, are you one of those guys who's thinking the silver's going over 30, over 40? I mean, where do you see this going long-term? Let's talk medium-term, next 3 to 5 years.
Or even short-term. I mean, obviously the seasonality is back. We're seeing a bounce off of the correction. So by year end, I am actually expecting $26 silver and $1,900 gold. It doesn't sound like a big stretch from here, but there's only 6 weeks left in the year. And that sets a really good trend, I think, for going into 2022. My expectations next year are to challenge the recent highs on the metals, so 2,100 gold, $30 silver. That would be in the next 12 to 18 months. And if you look out 3 to 5 years, now I think that's probably the end of this bull cycle. Hard to say, obviously, when you're forecasting so far in the future. But all of the key drivers for the top of a bull market in the precious metals are already in place. We already have a shortfall of new mine supply in both metals. We already have all-time record global sovereign debts and deficits. We already have investors finally tiptoeing back into the market, recognizing that gold and silver are historic stores of value. So all of these ingredients, they're already there. And we just need to be patient and they'll play themselves out.
You just mentioned the sort of long-term global supply. I'm going to show a graph here, one of my favorite ones from SRS Rocco, sort of annual global mine supply, all of them put together, has been in a downtrend since 2015, 2016. And obviously, you can see here, 2020 was probably virus, related, a little bit steeper than it should have been. But even before that, the trend was generally down from, let's call it, lower ore quality. The replacement mines coming online are generally smaller than the bigger, huge mines that have been depleted. Do you see this trend continuing, or do you see this bouncing back at some point?
Well, no, I don't see it continuing, and there's a very good reason why. Silver, amongst all the metals, is primarily a byproduct of base metal mines. So it's 2/3 of all new mined silver doesn't come from silver mines. It comes from copper mines and lead zinc mines and gold mines. And since we've just come through a 7-year bear market for all of those metals, and now they're just moving forward in the last couple of years, we're very early in the bull market for all of these metals. And so there will be a resumption of byproduct silver production as new copper, lead, zinc, and gold mines come to production. But there's a lag time, and the lag time is measured in years, not months. So we're still probably a couple of years away from the bottom. Well, maybe the spike down during COVID was the bottom, and we'll just flatline here for a year or two. And then you'll see the silver supply starting to rise again as we get further into this bull cycle. So that's the most reasonable expectation. However, what about demand? I mean, there's nothing to dampen demand here. We've had the COVID rebound. We've got long-term forecasts for all the industrial uses of silver that are would blow most other metals away. I mean, look at the demand for solar panels.
Yeah.
And we're talking about 96 million ounces last year went into silver panels.
The chart for electric vehicles I have up on the screen right now. Another big
we'll come to that one in a second. Keep that chart up, but let me finish on the solar panels. It's the biggest and fastest growing single driver on industrial demand. And if you believe any of the 2030 forecasts, the 96 million ounces has to double by 2030 for solar panels alone. I just got back from Nevada last night, and anywhere you drive in Nevada, you pass these solar fields. They're sprouting up like incredible, like chicken farms all over the place,
like weeds.
Like weeds. Now, that's a really disruptive technology, has been for the price of silver in recent years. You've got the EV and hybrid forecasts up here, and it's a multiple on solar power. We only used about 60 million ounces for automotive uses last year. And by the way, the vast majority of that was traditional internal combustion vehicles. Why? Because they're digital. Yeah. And every digital circuit uses chips, and every chip has electronic contacts. Yeah. And guess what you use on the contacts?
Just a gram or two of that little silver paste, right?
Yeah. Absolutely. So where are we going with this? Well, the conventional vehicle uses around an ounce of silver, plus or minus. The electric vehicle, being electric, uses about double. About 2 ounces of silver goes into an electric vehicle. Not for the battery, not for the wiring, but for all the electronic contacts with the digital circuitry.
Yeah.
If you believe any of the 10-year forecasts for the boom of EVs and hybrids to come, the 60 million ounces consumed last year has to triple by 2030, from 60 to 180. So, you're talking about adding another 100 million ounces for solar panels in the next 10 years. You're talking about more than 100 million ounces for electric vehicles in the next 10 years. Where's that metal going to come from?
My suspicion is, and you tell me whether you think I'm right or not. I think all that silver that's currently used for the coins and bars that investors like, that's a very low margin business, the bullion dealers, 3%, 4% margins. And I think, the Apples of the world, the Teslas of the world, who have higher margins are going to be able to outbid the private bullion market for that silver. And you're going to see a lot less coins and bars on the investor market as industrial demand consumes 100% of global mine supply. I don't know if you feel the same way or not. That's my theory.
So here's an interesting factoid. In the gold business, typically the price of gold is somewhat elastic. Investors view low price favorably and buy up more and more coins and bullion bars. And as the price of gold goes up, they buy less and less because it's more and more expensive. In the silver business, it's actually the opposite. People are afraid to come into the bottom of the market. And then, of course, when things start running, is when the masses barge in and buy their coins and bullion. It happened in the 70s, it happened again in the 90s, and it's going to happen again in the next 3 years. So, and I'm not saying it's wrong, I'm just saying that
that's how personalities work, or that's how
personalities work.
Fear of missing out, right? FOMO.
Yeah, exactly. So, but my thesis is that you've got this bedrock and very strong forecasted industrial growth for silver demand. You've got the return of the investor in the last 2 years alone to silver demand. And ultimately, we've had falling supply. We're going to see flatline supply here for a couple of years. So all of that adds up to higher prices.
Yeah. And like you said, I think if we hit $30 an ounce, US dollars an ounce, sort of that, it's going to be such a media sensation that then the fear of missing out sort of kicks in, and all the bullion dealers get wiped out in a weekend or something like that, like happened last February.
Yeah, and in terms of the long term, the rest of this cycle, I'll give you two metrics. One metric is that we made a quick trip to $49 silver in 2011, and certainly the charts are suggesting that we'll challenge that high again in this cycle. I think that would be a minimum target. And from the maximum target, well, the last time gold and silver were treated by investors as money and nothing but, as a true store of value against hyperinflation, that was the late 70s on the back of the oil crisis, peaking in early 1980 at around $800 gold and $50 silver, plus or minus.
Yeah, adjust that for inflation, what would the number be?
So, well, let's go there. By the way, the ratio of gold to silver at the peak is 16-1, and there's actually a rationale for that, because if you go back in time to when the British pound was the global reserve currency for the better part of 100 years in the 1800s into the early 1900s, gold and silver were fixed to the British pound at the ratio of 16-1. That was the ratio for currency back in the 1800s. I don't think it's a coincidence that when gold and silver returned as stores of value in the late 70s, that the ratio declined all the way down to 16-1. So where am I going with this? Well, it seems that when people treat gold and silver as nothing but stores of value, that seems to be where the ratio goes. And if we were to forecast, like the current ratio is 75, if you do the inflated price of 1980 gold and silver today, you're talking, I don't know, 2,700 gold, and I'm afraid to even think about the silver number, up in the high hundreds.
Yeah.
So that would be the other metric.
We're not afraid. We're not afraid, Brad. So you can think about it. It's okay.
And I'm not saying it has to go there. I'm simply saying that history is a good educator, and historically, if we go back to where we were in 1980, that's the possibility for these metals.
Yeah, and getting to a 30-to-1 gold ratio, gold to silver ratio would not be surprising to anyone, I don't think.
We got to 31 briefly in 2011.
Yeah, yeah. So yeah, getting back down to that number, especially if as the demand side starts consuming more and more, it's the solar, the EV, what you talked about. But if it's okay, I'd like to change the subject to inflation. Just the other day, German PPI just came out at 18.4%.
Yes. And
my comment on Twitter was, German DNA must be getting kind of twitchy about this. I don't know. They're buying a lot of gold in Germany right now. Investors are. All the people I talked to, Ronnie Sturfele in Germany, Willem Middelkoop in Amsterdam. They're telling me everyone's buying physical over there.
Because they, more than anybody worldwide, have the most recent example of getting bit by currency debasement. The Weimar in the 30s was a very, very harsh time when their currency became worthless. And even during the war years, everybody knew that if you had to move, the easiest way to take wealth with you was in the form of gold and silver.
Well, what do you think about, the argument made these days is that's, gold's, archaic. That's something for boomers and everyone should be owning, Bitcoin or Ethereum or XRP or whatever. I mean, are you a crypto guy?
I'm not a crypto guy. I'm a hard asset guy. And, if I have to pick up and move, I'm not going to be taking any Bitcoin with me because who's going to buy it and what's it worth?
Yeah.
Yeah. So what do you think of guys like Michael Saylor saying that Bitcoin's replacing gold and gold is dead? You think that's just something that they just got to,
That's just silliness.
Yeah.
That's just silliness. If you look at the net wealth worldwide held in precious metals versus cryptos, it's not even close.
Yeah.
Not even close. And they have an entire central banking system was still based on gold. Don't neglect gold and silver.
Yeah. Well, I mean, the Basel III rules, they just remonetized gold, right? They just made it a tier 1 asset again. I mean, one could make the argument they demonetized it in the 70s. They just remonetized it, right?
Yeah. Now, you asked me about crypto, so I'll give you my 2 bits worth. I think that the role of crypto going forward will be when the central banks finally embrace it as a payment strategy. Because if you actually try and send a wire transfer anywhere in the world today, it's incredibly painful, slow, and expensive process. And that's what crypto can replace.
Yeah. Gotcha. On to a different topic. You're most well known out there for having been the founder and now chairman of Endeavour Silver, but you have a new project underway, Aztec Minerals. You've decided to become a startup guy again. So tell us about Aztec. What's your thought here?
Well, Aztec was actually a private company for the better part of 20 years. And we brought it public in recent years because there's 2 very exciting projects that were needing capital to drill. I'd been moving the projects along with private investors and my own money in the pre-drilling phase. And we finally got to the point where there was nothing left to do but drill. So a very exciting company, Aztec Minerals, AZT is the symbol. We have 2 projects. The Tombstone project in Tombstone, Arizona is the one that we drilled just recently. We did a phase 2 drilling program at Tombstone. Tombstone was a historic silver district, by the way. And what we're going after is actually a polymetallic target. Barely 40 miles away, the Arizona mining discovery at what used to be called the Hermosa Silver Prospect got bought out a couple of years ago for $1.8 billion.
Wow.
What they found was 100 million tons of 10% zinc equivalent, with a small component of silver in there as well. We think that's what's lurking below the contention pit shown here in the photograph. Contention pit had a brief 2-year mining history above the 100 years of underground mining history back in the late 1800s, early 1900s up to the World War II. Then there was, of course, nothing happened until the late 80s when there was some drilling and mining here. We've been focused on drilling the remaining reserves around the contention pit. And we've been getting some fantastic drill results, up to 100 meters thickness, up to 5 grams gold equivalent in places. I think there's a lot left here for open pit mining, open pit heap leach mining, but the real prize is what we call the Taylor lookalike. I mentioned that Arizona Mining had made this discovery, the Taylor discovery, and got bought out for 1.8 billion. Well, we think there's one of those lurking below the contention pit, and we haven't yet drilled for it. We plan to drill for it next year.
So this is a combination gold and silver project, correct?
It is gold, silver, copper, lead, and zinc.
Gotcha.
It's considered a polymetallic target.
Well, with your background and your history of, with Endeavour, I think a lot of people will probably give Aztec a pretty good look. Because there's a lot of development companies out there, exploration companies that, never go anywhere, and you got to follow, what I've learned is you got to follow the guys who have a history of building mines. Those are the ones that are most likely to actually get somewhere, at least in this sector.
I own about 7% of Aztec, so I put money where my mouth is.
Yeah, you have some skin in the game. Yeah.
I do.
Well, Mr. Cooke, we really want to thank you for giving us some of your time. We know you're a busy guy. It took me a long time to actually get you scheduled, and I really appreciate you coming on. And I know you can't promise us, but we hope Endeavour keeps holding silver off the market and pushing the market for higher prices. We really appreciate that.
My pleasure to come on and talk about this. And I'm actually semi-retired now, so just give me a call anytime.
Semi-retired? All right. So, yeah, I noticed Rick Rule became a lot easier for me to schedule after he retired from Sprott. Maybe we'll be able to have you guys on, you on more often also.
Very good. Thanks, guys.